G'day everyone and welcome back to this Share Cafe Hidden Gems webinar. Now, before we kick off, we've got three exciting companies today. Before we kick off, something of note this week and something you're going to see probably a little bit more of is the emergence of some of these global online brokers who are coming to Australia with some big budgets to take on the likes of Self-Wealth and Superhero and Stake. And these offshore players we're talking about are the NASDAQ-listed Tiger Broking and the Chinese-based Futu. Now, all these offshore online brokers essentially offer global equities and Australian execution, and they make their money from the FX conversion, not so much the brokerage. But their technology is incredible. The Tiger platform, for example, looks like a Bloomberg terminal and services around 7 million investors globally and has that rare ability to offer kind of cheap brokerage or free brokerage with content and live data via an app. A massive 435,000 Australians joined the share market for the first time during COVID, and data from CommSec shows that 83% of these new investors in the market were first-timers or millennials or Gen Z. Now, that's a global trend, of course. So it appears that these offshore players are coming here as part of a global land grab, so to speak. They are more than just online brokers, though. They are tech companies looking to disrupt the incumbents like CommSec and are a lot more advanced than the online players currently in Australia. So watch out for these global online brokers that are coming to Australia in a big way very soon. Now, we're just about to make a start. Don't forget to ask questions. How do you ask questions? In the green box provided, please type in your questions there and we'll make sure we get to those questions. Okay, let's make a start. First up, we have Hexima, ASX code HXL, market cap of around $51 million, a one-year return of up 84%. The company is a biotech technology company actively engaged in the research and development of plant-derived proteins and peptides for applications as human therapeutics. We welcome back the Managing Director and CEO, Michael Aldridge. Michael, over to you. Thanks, mate.
Thanks very much indeed. Hello, my name is Michael Aldridge. I'm the CEO of Hexima Limited. Hexima is a biotech company, and we're developing a new treatment for a disease called onychomycosis, or fungal nail infections. Thank you very much. Let's advance to the next slide. That's the disclaimer. If we could advance to this introductory slide, I'll just hit a couple of highlights in terms of Hexima and what we do. We're an ASX listed company. We trade under the ticker HXL. And as I said, we're developing a new topical product. So it's a liquid that's applied directly to the nail, and it addresses a very large market. Onychomycosis is a fungal infection. It affects something like 14% of the US population. And it's a really tough disease to treat. If you suffer from this disease, there are topical and oral therapies to treat it, but it is very difficult to get rid of. And we've got something quite different. It's a new molecule. It's a proprietary molecule. We own this peptide and its ability to treat this disease. And it's got quite a unique approach. It rapidly penetrates the nail and very effectively kills the fungus on the far side. And so we've got a goal for this treatment to represent a very safe and well-tolerated and, more importantly, effective therapy for this disease, all in a very convenient and short course package. And we're relatively advanced. We're in phase 2 right now with the results of our phase 2 trial coming out this quarter. So it'll be an exciting time for us. And we anticipate moving into phase 3 later on this year. If you could advance to the next slide. We've got a very experienced team who all have done this before. I lead a group of folks who are based both in Australia and then some more recent hires in the US. Our head of development is based in the US. Our head of commercial recently hired is based in the US. And we've also added some manufacturing expertise recently. This team's come together very nicely as we advance our program through phase 2 and heading into phase 3. Thanks very much. And I'm going to play a short animation here because I think this will give you a very good idea of not only our product, how it works, and disease that it treats. So let's play that animation. Thank you.
Onychomycosis is a common infectious disease of nails caused by fungi. Some patient groups, such as the elderly and diabetics, are particularly vulnerable to the disease. The disease causes a large healthcare burden, and an estimated $3.7 billion is spent annually on treatments. The infection occurs when fungus enters under the nail plate. Once the fungus enters, it continues to grow and invade the nail bed, causing an infection. This infection causes discoloration and thickening of the nail plate. Left untreated, the nail becomes thick and brittle and easily separates from the nail bed, which can be painful. Pezadeftide is a potential new topical treatment for onychomycosis, which is currently being evaluated in clinical trials. Early phase clinical data suggests that pezadeftide may provide better efficacy than existing topical treatments, with a shorter treatment period. Once applied to the nails, pezadeftide is able to quickly pass through the keratin in the nail plate and into the nail bed to reach the site of infection. Once in the nail bed, pezadeftide quickly binds to the fungal cells and enters into the cell. Once inside, it rapidly attacks the cell's critical components and causes the cells to die. The appearance of the nail begins to improve in as little as 2 weeks. With the fungi in the nail bed now dead, the nail continues to grow clear over time. Pezadeftide is being developed by Hexima and has the potential to be a safe and effective topical treatment for onychomycosis with a convenient shorter course of therapy and rapid resolution of disease.
Thanks very much. Well, I hope that gave you a good idea of, we can advance to the next slide. That gave you a good idea of the disease that we're treating and the way that our molecule works. It's a very common condition. This will be very familiar to you, particularly if you're in an elderly patient group where it tends to be more common. As I said, there are 2 approaches to treating this disease. There's either the topical treatments that are available right now, and there are the oral medications, pills that you can take. The challenges associated with each are that the topical treatments take a very long time, daily therapy for a full year, and suffer from quite modest efficacy. They only work in about 10 to 15% of the patients they treat. The oral medications are more effective, but suffer from some quite significant and serious adverse events. And so patients tend to prefer treating this disease with topical therapies. That's the preferred mode. But they are frustrated by the fact that they've got to put these topical drugs on daily for a full year, and then it often doesn't work. And so there's a very clear unmet medical need. Patients are frustrated by the fact that they can't resolve this infection effectively. Thank you very much. And so this is our solution. The molecule we call pezadeftide. It's a naturally occurring peptide, which has actually evolved over millennia to serve an antifungal role in plants. We've co-opted this capability for its use in human pharmaceuticals, and it's got some particular properties that make it a potentially extremely powerful pharmaceutical agent. It's very hydrophilic, it dissolves very rapidly, and this encourages its penetration across the nail. It's very stable, and it's very powerfully antifungal. And fortunately, when it comes to a pharmaceutical agent, it's very specific for the fungal cells. It only kills the fungus. It has a very safe profile, and it's not absorbed through the human skin. It does all of its activity right there underneath the nail. Thanks very much. And we make these claims based on some really quite powerful early stage clinical data that we have. And so this is a phase 1 study that I'm going to take you through, where we treated an escalating doses of our drug through 3 different cohorts, up to 2%. We treated patients for just 6 weeks, daily therapy for 6 weeks, and then demonstrating that the drug was very safe, we expanded in cohort 4 to a much larger group of patients. Again, 6 weeks of daily therapy, and we followed all patients out to week 12. Thanks very much. And on this slide, just documenting the safety that we saw here, this drug has documented a very attractive safety profile. No drug-related adverse events, no itching, redness in the treatment area. And very nicely, as I said, it's not absorbed through the skin. We cannot detect pasideftide in the bloodstream. It doesn't give rise to any systemic toxic events. Next slide, please. And from the efficacy perspective, while this was a very early and short study, we have some very powerful evidence of activity here. And so this first measure is what we call a mycological cure. It's an evaluation of the presence of fungus in the samples that we take from the end of nails at the end of the study. The purple bar is the vehicle. It's the formulation with no drug in it. The green bar is the formulation containing pasideftide. And two important things, you can see, A, there's a dramatic difference between the two. We're clearly getting very powerful activity in the drug formulation. And the drug formulation was able to drive a mycological cure of 69% of the nails that it treated in the larger expansion cohort. And just to give you some context there, that's more than twofold better than any other approved topical or oral agent has been able to deliver in its studies to date. Next slide. And this is the second component of efficacy. What we're looking for here is the clearance of the nail growing out clear, having killed the fungus. What proportion of nails are demonstrating the fact that they have gone below 10% of the nail area still infected and still discolored by the original infection? Again, two features. The vehicle did nothing. You can see that line right across the bottom, and you can see an immediate response in the treated nails that improves over time. It's a very nice picture to show of improving efficacy, improving as the nails grow out clear over time. Thanks very much. And in this study, in this slide, I just want to demonstrate visually what we're able to achieve here. And so here's a little time-lapse photo. You could kick that off. That's before treatment. And then just 2 weeks later, so after 2 weeks of therapy, you're starting to see the nail grow out clear. At 6 weeks, that's the end of treatment. And then at 12 weeks, that's the end of study. You can see that the nail in this particular case has almost completely cleared. A very nice result for this disease. Next slide. And so what we think we have here is a drug which delivers on everything that this market opportunity is looking for. It appears to be a safe and well-tolerated medication with this very convenient, easy to apply and short course of therapy, delivering world-class clearance rates. And that, I think, is very powerful for this particular disease. Let's advance to the next slide. We're in the middle of a phase 2 clinical trial. We're looking at 3 different treatment arms: a short course, a long course, and then something that sits there in between, with a short course followed up by weekly pulses of drug. And everyone is being treated in one of those 3 treatment arms, and we are following patients all the way out to week 40. 117 patients have been enrolled. It's a multi-center study being run across New Zealand and Australia. And this is a study which we expect to report the results of in the second quarter of this year. Advance to the next slide, please. And just to give you some context of what we're looking for here, as I said, we're looking to report the results. This is a blinded study, so we do not know any results at this point in time, but it's a very important step towards phase 3. And what we're looking to achieve out of this study, if you looked at what we did in our phase 1 study, we had a very short course of therapy, just 6 weeks of daily dosing. We only followed patients out to 12 weeks, and it was only a single dosing approach. And we delivered some pretty impressive results, as you saw. In the phase 2 study, it's a much longer courses of therapy, somewhere between 12 and 36 weeks. We're following patients for a much longer period of time, allowing their nails to grow out clear. And we have 3 dosing approaches to see which is best: a short therapy, a long therapy, or something in between. In terms of what we would like to see coming out of this study that will really represent a platform for us to go to FDA and secure approval to get into phase 3 and validate the potential of this drug in a very sort of real sense, We want to see just as impressive mycological cures as we've documented to date. We'd love to see the nails growing out more healthy over a longer period of time. And of course, we'd like this study to drive our understanding of which is the best way for our drug to treat this disease, some sort of differential activity as between the three different treatment approaches that we've taken. Next slide, please. And so finally, just as a quick summary, it's a very large and poorly served market. There's a clear opportunity for something new and unique here. We have got a new molecule. It works very differently with a very strong patent protection around it. We've documented the safety here. We've always got more work to do there, but it's very clear that at this point in time, we've got a very safe medication that appears to have these very powerful attributes that make it a perfect candidate as a therapy here, being very convenient, easy to apply, topical therapy, driving what we think is going to be world-class efficacy. Now with that, thank you very much. I'll hand it back to the host.
Thank you, Michael. Quite a few questions here. Can you talk about the size of the market? Who's the kind of market leader now and kind of what's their market share?
It's a very large market in terms of its occurrence. I said it affects something like 10 to 14% of the world's population. It's an enormous number of people. The primary market for this disease is obviously the US, where a lot of money is spent on treating the condition. And also, interesting enough, Japan. Japanese population's got a real interest in a more cosmetically attractive appearance of their nails. They take their shoes off when they go into restaurants, etc. And so those are the two largest markets in this world. The leading therapy is it's a topical product called Jublia in the US, or Clenophen in Japan. It had at a point in time a very successful run and drove revenue close to $350 million annually in the US. It's since been hampered by a lot of pricing and market access restrictions, which has restricted its success. But what is very clear, if you talk to anyone that's been active in the development of drugs in this space, everyone is looking for a better way to treat this disease. And if you can crack this nut, you've got something extraordinarily valuable.
And you own some patents around the product?
We own the molecule and its treatment of onychomycosis and some other diseases. And then we also have a sort of a ring fencing of patents that protect smart things that we've done to the formulation. And then also the fact that this product is a biologic gives us market exclusivity following approval in most markets. So it's a very strong multi-layered patent protection that we own globally.
And understandably, I'm just going through the last quarter, you've spent a lot of money on R&D. Does that R&D spend come back to the company in those kind of innovation grants through the government?
We do. The Australian government is extraordinarily supportive of research and development expenditure in the Australian market. And so we've benefited from that enormously. Something just north of 40% of what you spend on qualifying R&D comes back in the form of a cash rebate annually on our R&D filing.
Excellent. And just probably in summary, what's the path to market? You've got to go phase 3, you've got to get approval. What's the path to market look like in a rough time frame?
So the pathway to market is absolutely phase 3 is our final step. Our primary target market is the US. With respect to the Japanese market, we would look to bring on a Japanese corporate to license the Japanese market. It's a separate and quite an insular market. We definitely need a Japanese partner there. And the phase 3 program is a 12-month study that we'd anticipate kicking off towards the end of this year. Run that study. We'll then make application to FDA for approval of the drug and looking to launch it thereafter.
Great, Michael. Thanks for coming back on. That's all we have time for, and we'll follow with interest the story.
Thank you very much indeed.
Thank you. Okay, next up we have Cipherpoint, ASX code CPT, market cap of around $8 million, 1 year return of minus 30%. The company, through its subsidiaries, is a focused, managed cybersecurity services business. We have with us their CEO, Ted Pretty. Ted, over to you. Thank you.
Yeah, thank you, Tim. And before I go to the first slide, just a bit of background. Cipherpoint was previously a listed entity called Cavada, which was in the software game. It actually produced software for securely storing information, particularly for government customers, and it had another product that operated for securing enterprises, particularly in their content management systems. Over the last 2 years, we've repurposed this listed entity to Cipherpoint, sold the software business, and now focused on what we call managed security services. But let me give you a quick overview of the business, and then hopefully in plain English and language, explain what we actually do. So next slide, please. So basically some basic corporate overview data, where the ticker is CPT. We're sitting with 2.6 million of cash as at March 31, the end of the quarter. Our financial year is actually March 31 end financial year. So we're an ASX listed managed cybersecurity services company. So what does that mean? It basically means that customers, business and government customers, connect their IT platforms to our security operations center, and with tools that we've built in that center, we monitor effectively traffic and activity within their IT network, both inside the organization, but also outside the organization. In other words, people that are trying to breach the firewalls to get inside an organization and perhaps access the company's or the enterprise's data, or to effectively try to achieve ransom by holding that data and downloading it and locking it. And so all of the sorts of things you see in the newspaper that happen where identities are stolen, someone accesses a system, commits some fraud, someone accesses a system and locks up the customer data of a business and so on. These are the sorts of things we actively monitor. So imagine it being like a physical security system where people are entering the building. This is a monitoring service that effectively sees people electronically performing activities which are unauthorized, trying to get in, knocking on your virtual door. So our approach is to provide innovative solutions in that area, and to as I said, enterprise and government. Having said that, and I'll come on to this later, we are expanding to look at the SMB market, because it's the most underserved in the cybersecurity environment. I'll explain why shortly. We have two businesses that we've acquired in Cipherpoint after we exited the software game. They are Brace 168, which is based in Sydney, and VIT Cybersecurity Services, that's based in Tasmania. And both businesses were acquired in the last 18 months, and they will form part of, or now form part of, our managed security business. If I go to the next slide and just talk briefly about the financials and market position, we've got a solid revenue base, but more importantly, 60% of our revenues are recurring. In other words, they're not one-off revenues where we're doing some securities consulting to a board or to an organization. They're not one-off revenues in that 60% that are doing penetration testing to see how strong or weak your security posture is. It's 60% is largely this recurring revenue, which is about actively in real time monitoring activities, security related activities within your business. Having acquired the two businesses, Brace and also VIT Services, we did make a conscious decision to deploy shareholder funds in building additional capacity during the FY22, which was for us is the year through to March this year, so that coming into FY23 from this quarter onwards, that we are positioned for growth. And that meant putting some new facilities, extending our SOC, adding sales resources into the business, and doing so in a market where those resources are very tight. One of the interesting things about the business, and that is, should a similar business ever acquire us, we have on our balance sheet, we have carried forward tax losses in excess of 40 million, largely related to the prior cyber activities of the company. On a comparative basis, revenue has been increasing quarter on quarter. The March quarter has been typically a seasonally lower quarter coming out of Christmas. But having said that, we have said in our 4C, our cash statement lodged with the market last night, that the board believes that we should be doing better on our sales cadence, and we're taking active steps to improve and hold more accountability around sales targets, because we believe the cyber market is growing, and it's growing rapidly, and we should be able to grow in line with that growth in the overall market. We trade at a very big discount to other listed peers, and the tickers are shown on the screen there. So we're trading less than 2 times revenues, trailing revenues. The average of that market is around 8.4, and that's largely off the back of the sentiment around cybersecurity activity. Our Q4 results, we had record customer receipts. The revenues weren't as high as we'd like them to be, but the customer receipts were strong, and largely that's because a lot of our customers, particularly some of the government agencies, pay us 12 months in advance. So from a customer receipt perspective, we don't have any debt. We have cash at bank, and we're able to bill a number of our customers upfront or on a monthly basis. So the focus of the board, to be realistic about us, and is that we believe we have a very strong core platform that we can grow this business, but we need to put more focus on our sales performance and reducing other corporate overhead, which is always a challenge, frankly, for small or micro cap stocks, because of the rigors required and the expense required to support a listed structure. Next page, please. So Brace, which is one of our business, was established only in 2017, and it provides, as I've said, a managed detection and response. So we not only detect inappropriate activity, but we have a platform that raises the alerts, and we can create responses where we or our customers actually remedy the issues or the vulnerabilities in their networks. And we acquired that in March of 21. We also acquired VITCS in Tasmania. It provides similar solutions and to agencies of the Tasmanian government and enterprise customers, and that was acquired in November. The customers actually spanned quite a wide range of sectors: financial, property, manufacturing, health, and so on. Some of the logos are shown on the screen, but I need to mention that some companies do not even like to disclose which organisations are providing their cybersecurity services, for the obvious reason that they don't want that to be another point of vulnerability, or to, I think, make their customers and shareholders nervous. So we disclose what we're able to disclose in terms of customer base, and this is always an interesting tussle with the ASX. As we've said to the ASX before, I don't think you want to disclose your security posture, and so it's consistent that many other customers don't want to do it. But we have shown that we can support large organisations and support them and win against our competition in the marketplace. Our competition largely consists of companies, listed companies like Tesseract, their ticker is TNT, or a multitude of smaller unlisted entities out there that provide some sort of IT and securities, digital security services. Next slide, please. So what sort of market are we in? Well, look, we're in a growing market, and I always hesitate to put up slides that talk about, in billions of dollars, the cybersecurity spend, because that consists of consulting services, some software product, and so on. We like to basically say, look, we're in a very big market. It's a big bucket of of revenue to pursue, a big opportunity, but we still have to execute sale by sale to secure our part of that growth. So we had 3 phases of growth when we shifted from being a software company to a services business. The first one was to acquire the other businesses and grow them organically, which we're doing. Secondly is to scale up with investments in more sales personnel, with investments in our security operations centre, but also at the same time reduce our costs. And that's what we're doing at the moment. And then the third phase is move quickly to positive cash flow and therefore profitability. One of the interesting challenges here is we think there's a massive opportunity in the small to medium enterprise sector in Australia. And from my time at 3 other very large organisations, I've seen it. And so we are now building a set of solutions for the SMB market, which could be as little as $100 a month, up to $1,500 a month. So you will see those launch in due course. Next slide. This is a little bit more data about the marketplace and you see the normal usual suspects that we compete against. Obviously the existing telephone carriers and consulting firms, and then Tesseract, which is TNT, and CyberCX, which is another privately held PE-backed organisation. We kind of see ourselves as more pure in terms of the managed service operations, and we focus around automating a lot of this, creating operational resilience and providing the reporting that our customers need to give to their boards. And the final slide, if I might, is to, and I don't want to go into detail here, but it just shows you the numbers, the types of services we apply across the marketplace, and also where we sit in terms of partnering. And we do have a number of channel partners to go to market. So in summary, 3 points. Business has been repurposed. It is intensely focused on security managed services, recurring revenue, and also growing from a relatively small base. Thanks, Tim. I think that's the presentation for me, and I'm happy to take questions.
Thanks, Ted. I don't think there's a consumer in the world that hasn't seen some sort of cyber threat of one form or another, particularly most recently. You spoke about the SMEs, I believe. Can you talk about who this ideal client is for you?
Well, I think it's traditionally been governments and larger corporations, but there's never a day goes by when you're not getting stories of the local real estate agent or which has had their tenancy data stolen and can't issue the reports to the landlords, or the local any form of small business that's had the computers locked up and can't access their accounting data or customer data. This happens all the time. The challenge for those organisations is they don't have IT departments. They don't have anything else. They actually they need to be able to subscribe to a service that eliminates, frankly, say 80% of the major threats. And depending on the size of those organisations, our estimate is that in addition to the bigger money that enterprises can spend, you could probably start between $100 a month for providing basic protection, so that we reduce their threat profile or the threat landscape for them, up to say $1,500 a month for a medium enterprise. Now, if we can nail that, and that's the bulk of Australian business, by the way. So in Australia, you've got basically 100 large companies that matter, followed by about 3,500 medium enterprises. And then the rest is 1.2 million small businesses. And everybody tries to target the top end. And we've got clients in that end. But the real replicable service where you can onboard people automatically and you can automate the process is around the SME market. That's what we're after.
And what's the sales process look like in regards to those smaller SMEs?
The product has to be largely digital marketing, right? And online onboarding, right? We don't need to train them because we're when we're seeking to be effectively the outsourced IT and security provider. We just effectively connect their platforms to ours, and then we provide them advice when we see the activity coming in and help them repair any holes, as it were. And, typically, even simple things that start to create vulnerabilities are password protection, not taking old employees off the system, not having basic security software installed in their environments. These are all the issues that we can do, but we want to automate that. And when we do that, the onboarding process and the sales process could be digital lead generation, automated onboarding, log your credit card into the system and do it that way. If you're doing it in the enterprise and government market, the sales cycle could be 6 to 9 months. And so you just have a smaller specialist team that focuses on that. So we have taken the view as we've acquired this platform that the best thing we can do now is use our platform to attack the bigger market that's at risk, which is the small to medium enterprise market in Australia.
And there's a question, I think I read this. Is there some government funding in the industry at present?
Yeah, so the government funding is pretty interesting. The federal government has announced incredible amount, billions of dollars of funding into their own agencies, particularly the security agencies, Australia's Signals Directorate and so on. But they've also announced around $780 million, I think it was, into supporting organisations that can increase the security posture of businesses in Australia. And certainly the incentives there is the government, part of that is the government is paying for training in security issues. So we do some of that today where we've been approached by RTOs or registered training organisations to provide more of that activity in the cyberspace. And so that's certainly something that, following the government's announcement, we've got to turn our attention to.
And just quickly, we do have to go. Is M&A part of the strategy moving forward?
Yeah, we'd like to. We bought the regional business down in Tasmania, and it was an excellent acquisition. Small, but the guys have proven to be very good at. Now they're part of a slightly larger organisation, more confidence in the local community. We think we'd like to do more of that around Australia, and maybe a little bit more into the IT managed services environment, because in the IT services management environment, you've got other customers that you can cross-sell to. And so one of our partners, for example, Excite IT, has a business roughly the same size as us, and we're cross-selling into each other's markets, which is very helpful.
Great, Ted. Good story in a big industry. So good luck out there, and we'll touch base again in the next 6 months or so.
And thank you for your time.
Thanks, Ted. Next up, we have ActivePort, ASX code ATV, market cap of 33 million. Looks like a new stock. It doesn't have 12-month track record. The company provides a software-defined networking tool, an SD-WAN. You can please explain what that means, Karim, to help companies run their technology their way and facilitate global connectivity. We have with us the CEO, Karim Nejaim. Over to you, Karim. Thank you.
Thank you very much, Tim, and I'll do exactly that. Good afternoon, everybody. Yes, I'm Karim Nejaim. I'm the CEO and MD of ActivePort Group. Just a little bit of background on me, if you haven't heard me speak before. I'm 25 years in IT and telecommunications, 14 years of which was at Optus, and 7 years at Telstra, where I finished as Executive Director of Product Engineering about 2 years ago. And in that role, my part of the organisation built all of Telstra's products for all segments across all technologies. And I decided to get out of the game of large businesses. Wasn't directly looking for a role as a CEO of a publicly listed company, but came across ActivePort. I was invited to be on the board, but then I saw the technology that ActivePort had. I'd spent a bunch of time in telecommunications. It joined a lot of dots, and I was very excited to join the company as CEO about 18 months ago. And what I'm about to run through in this presentation, I hope you'll see is almost organisationally transforming. We started with a strategy and a plan about 18 months, 2 years ago. We listed, as Tim mentioned, only in October of last year, but we're starting to see the strategy deliver exactly what we wanted it to deliver. and see the market responding brilliantly to the software we have and what we can do in the market. So if I go to the first slide, and I'll try to keep everything here as simple as I can technically. ActivePort's a software company, and what we're about is helping our customers connect across a city, across a country, or across the world. Our first product is SD-WAN, which is just one of those great industry terms at the moment, but it simply means software-defined wide area networking. And that means that we can build and control networks in software, and via the second tile there, our orchestration capability, build networks nationally, internationally, but also orchestrate lots of hardware, cloud, etc., all from one screen. I'll explain a bit about that in a moment, but we believe we're unique in our capability to build network and also orchestrate. And lastly, we've gotten into cloud and gotten into edge compute capability, particularly with one of our partners in gaming. So on to the next slide, it'll start making sense for you as I set out the stack, to call it another thing that we work in. We don't know of another company in the world that allows telecommunications companies and enterprises to manage their hardware, whether it's from Juniper or Cisco, to manage their networking through people like Console Connect and Vocus and Equinix, and all of their cloud services in one screen with a single pane of glass. The advantage we provide is that we can build all of those networks, but we can save a lot of money for the telecommunications enterprises that use our software, because instead of using 20 people to manage all of the technology, you can use one using our software, because we can automate, we can orchestrate and offer all of that management from one place. And the test we had into the market is, did the market want this and did the market understand? And if we move on to the next slide, I'll show you by each of those segments where we have traction and how it's pulling through for us. In SD-WAN and SD Internet, our customers are telecommunications providers and managed service providers and ISPs that wish to sell networking to their customers. So they sell our software in competition with people like Cisco and others into enterprise. And we have about 30 partners around Australia and around the world selling our software at the moment into enterprise. The second part of our software, and it is the same bundle of software, the second part of our software is around orchestration. And this is the area where we have the most traction, the most interest, and is around driving that digital transformation and cloud adoption. So we have a customer at the moment, by way of example, in India. And what that startup telecommunications company has decided to do is use our software at the heart of their business to build and manage all of their networking and technology capability and deliver services to their customers. So our software is at the heart of that company's telecommunications network, building services for customers in software from a single pane of glass, as I said, instead of having lots and lots of operators. And we're fortunate with that deal to be setting up with that startup, as I said, in a part of the world that has 1.12 billion telecommunications subscribers. It's countries like India, some parts of South America, into Southeast Asia, where we're getting the most traction. And assisting us with that is our latest announcement. We announced a relationship recently with a company called Radianarc, where we have built for them an edge cloud capability. And we build, deploy, and manage the edge cloud capability, but using the same software as SD-WAN and orchestration, we manage all of that connectivity from customers inside the telecommunications company and with all of the gaming providers to help Radianarc sell games to tens, hundreds of millions, or even billions of subscribers as they continue to roll out over time. And that deal, as noted here, is a $8.65 million minimum deal over the next 5 years. But in the case of SD-WAN and cloud, in telecommunications globally, there are not many areas of the market that are growing. And as you'll see from my notes on the right, The SD-WAN market is expected to grow to 30 billion by 2026. And it's SD-WAN and cloud are the two areas of growth that are present in telecommunications globally. That is right in our wheelhouse. That's exactly what we're delivering into. So the next slide, please. So our company has come together since October. We've made a couple of acquisitions, but what we are able to show now, coming out of H1 and into the end of Q3, we had a $3.5 million increase in revenue, which is 52%. And that shows the underlying strength of our services business, but increasingly, as if I ask you to go on to the next slide, please, and this is the really important piece for the company, and I talked about the position we have being transformative. Our revenue, as I mentioned, has grown, but the software revenue, the monthly recurring software revenue that's at the heart of our business, out of the foundations of Q2 and Q3, we've begun to drive revenue in the way we always hoped we would. And you can see that now almost 30% of the revenue for ActivePort Group is driven by our software revenue. What we can also see from our numbers in our recently released 4C is that the gross profit in that revenue has risen from 32% to 62% Q2 and Q3 on the back of that software revenue. Our software revenue is very, very high margin, and it's a margin play for us, or a play for us through those telecommunications providers, where we've written the software once and now we can monetize that software. You can see here from Q2 to Q3 that software revenue has turned on, and now we're heading in the trajectory we've been promising the market we'd be heading into out of those foundational quarters I was talking about. What that all means, onto the next slide, is we spent $2.4 million running the company in Q3, but because of that revenue turn on in software, which we have been promising the market since October, we have line of sight now to going along for the next couple of quarters with a very minimal net cash usage. So one thing for everybody, these numbers are indicative only. They are the projection we have for the company at present. But with the Radianart contract we have signed, with the Indian telco contract in the process of signing, with several other large software contracts we're in the process of signing, and a number of our customers, both in Australia and into Southeast Asia, the sales cycle is complete. The delivery cycle is completing. We now have the revenue uptake in our software, and we can see, as per this slide, that cash contribution means that our cash burn will slow for the next few quarters, and we'll start building cash as a company post that time. So again, it's highly valuable for us around that software revenue, and it's making a significant contribution to the company's bottom line in cash. So as we head on to the next slide, I'll set out a couple of things for you. What we're driving at next is the Q4 and beyond is the big end of town is most attracted to our software because of the efficiency it can provide, because of the utility it can provide. And instead of taking days or weeks to build a network globally, we can do it for you in our software in seconds or minutes. So we have an increased sales focus in SD-WAN and orchestration into global telecommunications, building on the success of Q3. We also have a future in enterprise networking. So the bigger end of town customers using our software to build networks internationally, nationally, and incorporating cloud via our via our managed service ISP and telecommunications partners. We will launch a new product called Global Edge, and this product is all around a portal that will allow a customer to go on and say, I'd like to be operating out of Tokyo, London, Dallas. We will automatically build a network for them, and if they wish to, incorporate cloud into that. So it's a point and click, very quick to cash for us from the point of order. And lastly, a focus for us with our important partner, Radian, is to take the pipeline of 11 telecommunications companies that we are delivering into. We have a sales order pipeline of 36 of those now. So delivering into Radian is key for us as well to deliver that $8.65 million and hopefully exceed it. So into the next slide. What does all of this mean for an investor? We now can demonstrate from our most recent ASX submission that we're moving to a larger percentage of our revenue coming from that highly profitable monthly reoccurring software that, as I've said, we've been promising the market since we listed. We have a product which is highly innovative. I like using the term unique, but what that software does, and in our conversations with Gartner, they have asked us, well, are you a networking company, an orchestration company, a cloud company? We need to put you in a box. Well, we don't fit in that box because we're joining the dots across networking and orchestration and cloud management, automated in software, which we believe is attractive and innovative internationally. And the market has given us a very strong positive response, and the amount of interest our software is driving is increasing. Our positive outlook is now backed by numbers. It's very nice to be the CEO of a publicly listed company, having gone through a raise, having gone through a listing, where you're making a lot of promises, you're making a lot of guarantees based on where you believe the software can drive our revenue to. We can now back that out in numbers, and we can start showing, as per my earlier slide, that we're now driving towards a much stronger position in cash and a much lower net cash burn and heading for that cash flow positive territory. We also have a number of new products coming down the pipeline, and I've been fortunate enough to surround myself with a very strong management and leadership team. So the strategy is working, the strategy is in place. It's all about execution now, and that's our focus Q4 this financial year and beyond. So Tim, that's about as quickly as I can explain ActivePort. And please, any questions for everybody?
I think you've done a great job. Thank you. When you showed those tiles in terms of the different areas that you service, so with a telco company and that SD-WAN, can you is the idea to bring you walk in there and you're solving a common problem, and then is the idea to convert them into this subscription model moving forward?
Great question. Yeah. So the way that our software is sold, or the way that the SD-WAN component is sold, is companies like Telstra and Optus and others over the years have sold big fat pipes to companies for links. The internet connectivity is now so consistent and fast that it's possible to build networks over the internet, manage that in software very quickly with high bandwidth. So the first thing our software does is it will manage the old and manage the new for you. But you're quite right. Companies are moving away from, at the rate of around about 73% per annum, away from those old big fat pipes to SD-WAN because it's flexible. And so the idea is you buy an SD-WAN service, you connect all of your offices, you throw away all of that expensive set links, and that for us becomes a monthly recurring revenue per port for SD-WAN. So what we start seeing from that foundation I was talking about is the software goes into one of our customers and then begins to grow and grow and grow, and that just becomes a high profit software revenue for us, monthly recurring, yes.
And do you have software subscriptions outside of the telcos servicing different clients for different needs?
Yeah, so we have telecommunications is our primary area of focus, and telecommunications companies can use our software themselves internally or sell it to their enterprises. Our software is extremely flexible, and I mentioned before, talking about cloud and Radian, we didn't build new software to go into cloud from networking. We used the same software and adapted it slightly to do cloud stuff. Because, and it's a difficult concept for those who haven't spent years in technology, having one place to manage all of the complexity in technology and cloud and networking is hugely valuable. So wherever a company needs to simplify, automate, that's where we're getting attraction to our orchestration capability, and add in the networking bit as well, and you've got an entire solution.
And what's the sales process look like for these global telcos? I mean, I can't get through to Telstra at the best of times. It must take some time.
So that's a really good point. When traditionally, what used to happen is exactly what you just said. If you had Tim McGowan Inc. and you had an office in Tokyo and Sydney and Dallas, you would need to call Telstra, and they would need to call telco in Japan, and then you'd need to call a telecommunications company in the US, and they'd all put you on hold, and weeks later, you might get one link. What happens now is that using some of those global transit providers I was talking about, like Equinix and like PCCW and others, a lot of the network is already there. You just need a path across it. And so one of the things we love doing in our presentations is click, 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 buy. And the question everyone asks in the presentation is, when does the link get built? And we say, well, just did. You've now got connectivity between those two places. So the sales cycle for us into telecommunications companies takes about 3 months. We have to bring their salespeople up to speed, deploy our software into their environment so they get to use it. Then their salespeople go into their sales cycle. Once one of their customers is purchased, we can turn on revenue very quickly. But it's about a 3 to 6 month cycle from first conversation, helping our partners to the point that they have a sale. The global edge piece I was talking about radically shrinks that to hours or days from I want a network to the revenue turning on.
And I assume you're introducing a significant cost reduction to these telcos?
Absolutely. Having spent so much of my life around telecommunications, what happens, and it's the thing that the Indian telco is so interested in, is they don't need 5 or 6 different systems, one to manage that tech, one to manage that tech, one to manage the network, one to manage the cloud. They can do it all from one place. So you can see a 4, 5, 6-fold reduction in cost. The cost never actually turns on. So they can go into selling lots and lots of services with a really slim back end, managing all of those services. So it's upside for the telco as well, turning on networking and revenue from networking, but with a really thin back end using our software with much, much lower cost than having 20 people typing on keyboards.
And no real competitors in this space. You must be an attractive option with the more kind of contracts you pick up if the software is this unique.
We have competition in the SD-WAN market, which is quite tight. In the orchestration market, as I said, they're quite unique, and being able to orchestrate between network and cloud is quite rare. One of the things that we have in our advantage is we're not inside a telco and we're not inside a vendor. We're completely vendor agnostic and telco agnostic. So when people do try and copy us, they tend to do it from inside their company, and they can only do it to their stuff. So the advantage we have is we're growing it outside all of those guys and can orchestrate most of them. I've been asked this by many investors. Yes, we will get copied over time, but I believe that we have anywhere up to a 2-year jump on the market. And the more we deliver our new technologies, the more products we roll out, we'll keep ahead of the market. It's flattering when people start copying you. We'll see if that starts happening, but we've got the market to ourselves in this breadth, we believe, globally at the moment.
Great. That's all we have time for, Karim. Really interesting story, and we will follow up again later in the year.
Thank you, Tim. Thank you,
Thanks
everyone.
for your time. Have a nice weekend. That's all we have time for, everyone. Have a nice weekend, and we'll see you all again next week.